Hey everyone, how's it going? Welcome back to another stock market outlook video brought to you by DeepView. As always, we're going to run through the indexes, leading groups, as well as the leading stocks in the market. So stay tuned, stick around until the end. And if you do enjoy this, make sure to leave a like down below. It really helps me out and my channel. And of course, subscribe if you want to see more videos just like this one. With that said, let's start with the index ETFs, looking at the QQQ, the NASDAQ 100 ETF. First things first, I always look at where we are with respect to that 21 EMA. We're below a declining 21 EMA. That means we're currently in a intermediate term downtrend, and we're also below the 50 SMA as well. And if I even turn on the 5-day simple moving average, we're also below that. So with respect to pretty much every time frame except the longer term time frame, which is kind of controlled by this 200 SMA, we are in a downtrend. Now looking, to the left here, and let me auto fit this here. Looking at where we could get potential support, the 200-day is a key spot, as well as the top of this prior resistance level. And zooming in, we're not too far from that. We did have a gap up with the poor close today. So this, for the time being, is the current correction low, but we'll have to see whether we correct further or just we kind of consolidate in time, form out a range, let that 200 SMA catch up to price. But this will be a key level to watch. If we do break that, I think this level, going back over a year or so now, is another key spot that could be a potential area of support. But first, looking at this week's action, last Friday ended on a sour note. The expectation was lower from this point. We did get continuation lower, but then a strong close on this Monday. We did close off highs, but back above this support level, followed through to the upside, and then things really kind of came undone Wednesday and Thursday after earnings. Google, Amazon, Meta, the big boys reporting, and the market not reacting well to those news events, and just in general more distribution from my growth stock watch list and just more corrections across the board. So Wednesday and Thursday, sharp follow through to the downside, breaking these lows, and now approaching, as I mentioned, this 200 SMA. And in DeepView, one thing I really like is you can go ahead and invert the scale and get a sense of, if this were, to the long side, what would it look like? The expectation here would be we're in a short-term uptrend. We'll see a pause potentially as we meet the 200 SMA and likely retest the 21 EMA at some point. But right now, kind of the direction is up on the inverted time frame. So that's just kind of a cool change of perspective. So likewise, we'll potentially see rallies up into the 21 EMA. And for the time being, the expectation is after those rallies, they'll fail and will resume to the downside. But we are approaching potential areas of support where a correction low could be formed. So we'll have to wait and see what happens. But as right now, we're in a downtrend based on the QQQ. Looking at the IWO, it's always good to get a sense of the small caps as well. And this looks much worse. It's been weaker pretty much all year long since these July highs, well below declining 50 SMA, below the 200 SMA as well. And you can see how the 21 EMA has been resistance, or at least the area has been resistance going back in the past. We are certainly extended to the downside, at least in the short term here. And if you scroll back in time, you can see that we're approaching these significant lows. So this could be a spot once again where a low could form. But as of right now, the trend is lower. Now looking at this, once again, extend to the downside, at least in the short term. So any day could, form some structure consolidation, which could either resolve to the downside and continue lower, or potentially we'll let that moving average kind of catch up to price, 50 SMA as well, and start to form out some low. But right now, stage 4 decline, and we have to wait for that kind of stage 1 basing period. And let's actually take a look at it on a weekly time frame. Switching things up, you can see once again approaching these lows, and this was the prior stage 4 decline. We formed a stage 1 and now are kind of back in that stage 4, but we'll have to see what happens, whether we can find support at these lows or this correction basically continues. But looking at the QQQ on the longer time frame as well, let's bring that up. You can see once again, just looks like a correction. No signs yet of a short-term bottom. I would have liked to see a strong close to this week, and then potentially, this would have been kind of a shakeout week. But as of the moment, we're still waiting for that bottom to form. So we'll just have to kind of wait and see what happens. And now, as always, we're in the business of interpretation. We don't have to, predict the future. We can have expectations, but we always want to kind of react to what's actually going on in front of our eyes and actually analyzing the charts in real time. All right, so with that said, let's go ahead and run through some key stocks. In terms of groups, my focus is still on cybersecurity software names. Those have been kind of holding up the best. But recently there's been, some biotech names acting well. LLY is an example. This did break down. Let's go back to a daily chart here. This did break down below the 21 EMA, but there's some biotech names acting well, some energy names as well. But let's go through a bunch of stocks. So first things first, bringing up the big boys. Let's take a look at NVIDIA. This is near correction low. So once again, a spot where you could find support, but it has to. And we'll see if we can get back above that 21 EMA. Right now, we broke it on this day. This kind of started the short-term downtrend in this name after it kind of broke through this downward trend line. This day was definitely significant. We see some hesitation on this bar right here, broke to the downside, tried to rally out the 50 SMA, and then expectations really broke, and we gapped down and started this short-term downtrend. So this one's still consolidating at this key level, and we'll see if it can react positively to that next week, or potentially it breaks down further, tests the gap lows or the gap up lows, as well as the 200 SMA. That would kind of line up around 366. Bringing up Tesla, you can see that this had a negative reaction to earnings, and is right at that 200 SMA, right at these lows as well. And to me, it looks pretty negative here. Lots of signs of distribution, a lot of gaps down, and still has to form out some type of bottom here. But I wouldn't be surprised to see this low tested, at least at some point. Bringing up Google, let's bring up that chart here. You can see negative reaction, very negative reaction to earnings, and fall through to the downside. And this just looks like the start of a consolidation. So I definitely expect a 200 SMA test, whether it builds out and lets that moving average catch up to price, or if it continues down lower and tests this level. You can see a pickup in volume on this pullback. Bring up Amazon. This reported as well. Good action today, not the best close, but considering the overall market backdrop, not bad action at all. Pick up in volume as well, but still looks like the left-hand side of a base to me. Lastly, let's take a look at Meta. You can see gap down, but a decent close after earnings and some fall through to the upside today, which is constructive. This has been kind of the big cap that looks the best, especially in this area. Nice tight action near the moving averages, nice short-term move, but then it kind of fell apart on this day and reconfirmed down on this day as it was rejected down from that 21 EMA. Here we had a gap up, poor close right at that moving average, and then that started this fall through to the downside. So this still needs to shape up, forming a base around high of 327 and a low right now around 274. So if we continue to firm up, I think that'd be constructive, but we'll just have to wait and see what happens. But in terms of the big caps, mixed bag here. Some are acting a little bit better, but pretty much all of them definitely need some work. CrowdStrike, this has been a name I've been focused on to the long side. Definitely nice action here. Below the 21 EMA at this point, but it's right at this consolidation highs here. So there's a potential spot where we could see reversal inside day to end out this week. You can see volatility is contracting here in the RMV, and we'll just have to wait and see what direction it chooses. I wouldn't be surprised to see it wait for that 50 SMA to kind of rise up to meet price, and some sideways movement would be definitely constructive. Going over to the DFU leaders screen, which is basically a new screen that we just added. It's a preset. You can see the criteria here, basically looking for relative strength, trend, as well as earnings and sales growth. And if you have DFU, you can go ahead and find it really easily. Screen of presets, DFU, and it's the first name on this list. So this brings up kind of the top select few names based on techno fundamentalist perspective, and it adjusts in real time to what's actually leading. So DEC is a name that gapped up today, very strong action. If we bring up the earnings here, we can hover over today's quarter, and you can see a nice surprise of 55%. So really nice action, not necessarily a traditional growth leader, but it is a name that's acting well, and we do see acceleration in earnings as well as sales. FIX also a recent gap up here. LRN, Chinese company acting well. CrowdStrike acting well, or relative on a relative basis. PDD has been holding up pretty nicely. We do see a gap up in fade today, but there's a few other names on this list. None of these are perfectly shaped up, and I think that's telling about the overall environment. Even AMP was red today, so that tells you a little bit about the environment. So kind of less is more, both from an index perspective, group perspective, as well as individual stock perspective. There's not just much out there setting up. Spotify is a name that I'll be watching. It's on my focus list because it had a really nice beat of 261%. Obviously, we're going from negative to positive, so this number is skewed somewhat, but it's the first positive quarter, and that's often a key spot in a recent IPO's kind of life cycle. And you can see guidance was raised going out into the future. I really like being able to see this in deep view, and really significant growth as well is expected. So this is an interesting stock that's on my radar. Gap up on earnings. Obviously, the overall market is a negative. It's holding stuff back, holding stuff down at this point. But if that pressure is lifted, we could see some of these names showing relative strength like this, like CrowdStrike, like PDD act really well. So this is a list to have on your radar. Definitely check it out if you're using Deep View. And that's pretty much it for today. There's not much to say when the QQQ is below a declining 21 EMA, 50 SMA, and we'll just have to wait and see whether it can form out this range, let that 200 SMA kind of act as support. And we want to see this firm up. We want to see groups form up as well. And, all those signs that suggest that a new uptrend could be starting soon. But as of this moment, you should be pretty much in cash or shorting. And the spot to short was really, on the breakdown where we really lost 21 EMA, reconfirmation downward here. At the moment, we're kind of so short-term extended to the downside that, the risk reward for shorting is a little bit skewed. Definitely if there's a rally back into the 21 EMA, people who like to short and are good at it can try to find spots to put that on. But other than that, less is more in this environment. Work on your system, research, different studies, all that stuff. And there's better use of your time than try to force something in this environment until we see the signs that things are shaping up again. So yeah, that's pretty much it for today. Hopefully you guys are protecting your capital during this market correction. And thanks so much for watching. If you're sticking around to the end, let me know down below in the comment section. I appreciate you watching, and make sure to leave a like if you enjoyed and subscribe if you're new to the channel. And I'll see you guys in future videos. Take care.